Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto, and today I am here with
Dan Hussey, everybody. How's it going?
Dan. A lot of moving parts today, some stuff to cover as usual, taking a deep dive into the grain, livestock markets. We're talking about a little bit of WASDE here this morning, and couldn't help but notice that you have a cast or a boot on one of your limbs.
Yeah.
Dan, before we get started, I just wanted to mention I'm in probably terrible shape, maybe some of the worst shape I've ever been in my entire life. But my foot isn't broken. My elbow also not broken. So in terms of fitness advice, like if you wanted to be fit to use your elbow or fit to walk down the street, maybe you might want to start eating more pizza and drinking more beer. I mean, I don't want to show off, but
Yeah, onto something. The health crisis that is Dan Hussey right now is just a walking. Well, I'm certainly, let's just say, either putting a new addition on my doctor's house or have now afforded him a new boat after this last week.
reminds
When
me
it
of
rains,
being
it
a
pours.
young man.
I'm
One of the funnest-
more afraid though, Joe. Like these things happen in threes. What? I need to go buy
Don't leave
a
the house.
life insurance policy if I don't
Don't leave
have
the
one
house.
already.
When I was a young man, one of the first automobiles I purchased with my own money was a Pontiac Bonneville. And it was shiny and black and fast and turbocharged. And almost immediately stuff started falling off of that car. Had a tremendous engine.
Of course.
Tremendous engine, but everything else around it fell apart. And I'm starting to see a little parallel, Dan. I mean, you do have a tremendous engine. You might want to get some extra insurance on the appendages.
Yeah, and for those that don't know, I had a little bit of a case of elbow bursitis. My elbow exploded to the size of a softball. Now I broke my foot running the other day. So it's been a crazy week for me. Of course, Joe and I are over here cracking jokes about my health and my injuries that many of you probably don't even know what happened, right? But my misfortune
knock on the
last
table.
week.
Knock on the table so me talking
Yeah.
smack doesn't have me turn an ankle or something here while I'm walking to the
I'm hoping you've
pizza
picked up
place.
that karmatic response from the universe right now, and you'll absorb that number 3 that's heading my way. Because I don't know what I can do. I can't take it, man. I can't take it. But
we wish you a speedy recovery.
thank you. Thank
A
you.
lot
And
like the grain markets, just beat down.
perfect segue. We're just everybody is in the gutter, getting beaten, crunched on, and has some recovery now ahead.
A lot of moving parts here with this WASDE today. I did my best to keep up with all of the different ways to look at this. And as I was trying to internalize South American crop production, U.S. crop production, acreage unchanged, but still record high. Countless. What's another good one? U.S. corn exports, China corn and wheat imports tanking.
Yeah, that export hit was, I think, one of those. I don't want to say surprise because I feel like we're all kind of waiting for it, tongue in cheek. We're holding our breath, knowing with trade deals and tariffs and everything else, right? Exports are probably not. This isn't the year where we're going to probably have record exports, is what I'm getting at. But it is interesting, and from a comment from Ted earlier today amongst ourselves, that the USDA is willing to go there and start to take a bite out of that and kind of confirm that, maybe on the soybean side at least, right, we're not going to be seeing that commitment because of that big South American crop. Already exports on the book from South America, particularly from Argentina in the fall for China. Those are the precursors to, depending on where China looks to buy those beans, if they're already getting on the books elsewhere, doesn't paint a great picture for our demand in the short term.
For sure. So U.S. ending stocks, good a place to start as any, I would say.
Yeah.
Corn number came in a bit lighter than the trade average, lighter than the trade anticipated. To me, that was neutral to bullish, right? In your 2025, 2026 number, trade was looking for 1.72 billion bushels, came in at 1.66. That 25, 26, I thought that was rather interesting and maybe could have been spun.
It's a tale of two export scenarios, right? You've got corn hitting great export numbers and soybeans hitting laggard, and you're seeing it translate there on the balance sheets with those ending stocks.
Beans, now that we mention it, looking for a 0.358, got 0.350, call it a push, huh? 2025, 2026, a little higher than expectations, so cancel that out. Wheat, Ending stocks for 24-25, 0.851. More importantly, the 25-26, 0.890, kind of right on the money. Not really, wouldn't call any of that a surprise.
No,
by any stretch,
kind of
right?
no, just in status quo for the wheat. I think there's other things affecting those markets going on right now, and we'll see that. I think when it comes to both that's the world stocks, not for wheat, but those wheat production numbers we'll get to in a minute.
So China imports corn and wheat, dismal for 24-25, but coming back in 25-26.
Yeah, it'll be an interesting. It's interesting to see that we're keeping that much faith, I guess, in the way that these narratives will play out. Because I would not. Let's just put it this way: I would not want to be in the USDA's shoes trying to forecast what export expectations are for China or anywhere when every day things are up in the air. It's a fluid situation.
Right? Yeah, for sure. U.S. crop production,
not a place I'd want to be.
No changes to either of these numbers, 181 and 52.5. Production number 15705 and 4.335. I don't have any color on that. What do you think about that?
There they are. The trade was really not looking for much of a change here. It's early, and it's too early to really call a yield change, obviously, because of the weather we've been getting. I think there's a lot of circles that are starting to look at these numbers, though, and talk about how far off is the gap from the USDA, right? The USDA's number from actual end of the year balance sheet expectations. We always have these discussions throughout the year with clients and even amongst ourselves, reminding ourselves that, hey, this report is about guessing where the USDA is going to be for these numbers. And they have certain metrics and things that they follow that really, at this point, keep yield completely unchanged and acreage numbers completely unchanged, because the way they go about it just doesn't warrant a change. And it doesn't mean that this is where we are or where we would guess these yield numbers are at or where they will be. And if anything, I think there's been talk that some of these numbers, the USDA numbers, might be on the light side. If you haven't yet, at least start talking about the picture. What does 54 at national average in the soybeans look like? What does it 185 in the corn look like, right? Not to say that that yield will completely be harvested at the end of the day, but start painting that picture and then asking yourselves, where are we really pricing corn right now? Is this a 181 yield or is this a 185 yield in the board price? And that's the conversation that I take away from these numbers that we got today that really didn't do anything for us. At least they certainly didn't change or move the barometer, in my opinion. I mean, not for U.S. production, at least. There was other places in this report that said it. And if the trade is now expecting a higher production number, maybe that's why we're starting to see the board price and price in lower here after these numbers have come out.
USDA South American crop production numbers are starting to get bigger. Argentina came in at 50.
Acknowledging the monster in the room, right?
Yeah. Brazil came in at 132. Trade average is 132.53. Soybeans, Argentina 49.9. Brazil 169 in soybeans. Both of those numbers not far off of the trade average. And somebody we saw in the chat group here today, somebody mentioned at least their USDA showing a willingness to begin to dip into those increasing numbers, right? I mean, it's getting bigger. Big crops get bigger.
Yeah, the big crop's getting bigger. The USDA is starting to acknowledge that. I think the trade generally was expecting and has been expecting this for a while, but it still it's not great to see. And when you see that coupled with exports on the books for Argentina and China, already in the fall, it doesn't look great. It doesn't feel great. And I can understand how there's a bearish undertone to this report, given what we saw today. Bigger crop, bigger balance sheets globally. No good news in terms of the U.S. balance sheet shrinking and exports kind of pushing out further. You're left with a slightly bad taste in your mouth, right?
Corn exports, those are some pretty big numbers.
That's a beautiful, rosy place in the entire
2.75 billion. Pretty big numbers in terms of exports.
Yeah. Record setting, if I'm not mistaken.
Yeah, record. And that in the United States corn export chart, 24-25, just looks great. And the expectations for 25, 26, they are looking for exports to continue on in the same way. On the other side of that coin, you mentioned we've got great crop coming out of South America. I'm not sure that Brazilian corn crop is quite ready to be on the world stage yet, right? It's drying out in a field somewhere. We don't have it in a boat, but we're acting like it's here already today. From what I understand, domestic basis is beginning to erode. I don't know if that's a gambit or just a reality check, but this export picture for corn looks pretty good. I just don't know that there's anything there. Obviously, we do know because you saw today's technical action, nothing here to really change that narrative. And I start to think, okay, what is going to change this narrative? And one thing that caught my eye was the United States soybean oil used for biofuels chart that Karen had posted. I mean, that, and I think she used the word surge. That is a big move here, up over the 50% mark.
Yeah.
And
yes, I see that here.
so a big chunk, and I can't remember what percentage of all bean oil will be used for biofuels. And so now the job of the meal market is to find a price level to where we can also begin to find a home for all this meal. But pretty neat deal here that we're going to be using, that the USDA is showing that we're going to be using this oil for biofuels, and sort of sets the stage for more progression in that as well. Don't you think? We've been watching this for a long time.
We have, and it's been a development that, like, it's great to see, like, the stats and the economics following suit with, right, the direction that you want to see these products go. But it also, you're right, it's a reminder that we're not talking agricultural products anymore. We're talking energy products now. And the correlations between crude oil, as that soybean oil used for biofuels continues to rise, you're going to see positive correlations more with energy products than other things. And that's something that you have to keep in mind, just in the back of your head. That, and we saw that, right? Corn pre-2010, pre-ethanol era was a different beast, a different economy. Soybeans are entering and going into that adolescent stage. I think corn's already come out of that adolescent stage, right? Ethanol is really permeated. There's an ample supply chain. We've got production facilities everywhere. Now we're starting to ramp them up on the biodiesel side, right? The sustainable aviation fuel, hopefully being the next iteration of that whole chapter. And I think that number is going to rise to darn near 100%. The trend is seed oils are not necessarily, there's definitely been a negative trend in seed oil use for other consumption, right? And there's been an uptrend in use for energy products. So, okay, great. That's a beautiful thing. More demand for the products we produce here in America. That's capitalism at its finest.
Kind of a tectonic plate style shift, right? We really are moving in a big way into the energy space with these agricultural products, and couldn't come at a better time.
No, it's exciting, but it's also could be chaotic, and there's going to be a lot of unknowns that price discovery and economics of how these things churn out will come to light. But we're always here to have another discussion with you and anyone who's interested in learning more about how these things can and will affect your own personal bottom line.
Big shift out of exports into domestic use. And I thought that was pretty interesting and rather productive information, right?
Yeah. And it's funny. It's kind of the same game plan we did with big oil through the 90s and into the 2000s, right? We shifted from a net importer of oil as a country to a net exporter. And we were reminded that, hey, we are a strong commodity producing nation that genuinely shouldn't be wasting the things that we can produce. Why import it? I mean, for oil for a long time, the thought was, right, why use what we have when we could just import it, right? At the end of the day, we realized that we were giving away our energy dominance and lost, right, control of our own energy market. As a nation, we took that back, and it's great to see. I think this is a chance to do with agriculture again, right? Finding that domestic demand to support domestic GDP, to support support an entire sector here in a new way. Like you said, a tectonic shift in the way demand will look into the future. It's an exciting time.
Value capture for us, right?
Yeah.
We'll capture that value, and instead of exporting those products. We want to let you know that if you're interested in hearing about grain market movement, as Dan was alluding to, if you've got questions or you want to get a better understanding of grain market movements, strategies daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert. It's totally free. It gives you a chance to connect with us personally if you have any specific questions or general questions about the agricultural markets agricultural commodities as a whole. If you're interested in learning more about how this price action works and how to make this price action work for you, it's a perfect way to take a first step. Link is in the description below. Sign up for that. It's totally free, zero commitment. We're always happy to have conversations with folks who are trying to get decision-making support from Zaner Ag Hedge. Dan, I feel warmed up. Like it's okay to take this beat down that we're going to have to talk about here in corn, wheat. If you're ready,
rip those band-aids off. Let's go through these numbers.
If you're ready,
get us out on technicals, because there isn't much in the chart for us to report as markets are finding new, like lows here. But let's take a look at those weekly numbers and give the rundown.
Let's take it one at a time and see if we can't chop through this. These corn opened the week 429.5. The high was 429.75. Low 411.5. Last trade 412.25. Dan, that was down 24.75. They estimate the funds are short 204,000. My guess is it's bigger than that. I think they'll tell us, or they already told us, or they'll tell us this afternoon, coming into the day, estimated to be short 204,000 contracts. As you mentioned, that D's corn chart, that looks terrible.
Yeah.
We're well stretched out. We may be oversold here. How oversold? All these moving averages are so stretched out. 10-day comes in at 422, 18 at 427.
7, yep. 100-day falling below that 200-day for the first time again since April. We had a bullish crossover there that was looking good going into planting seasons. We basically unwound that. This market says no need for weather premiums today, folks. And that's, I think, what we're effectively seeing. So the hunt for how far down this market can go, are we going to put a 3 handle in front of December corn? It sure feels that way. So prepare yourselves mentally for what that looks like and what that feels like. I don't think we're going to stick around down here because I genuinely feel we're getting down to prices that it's like, come on, commercials. We're getting it away. And I do believe we're also at those levels that crunch the farm in a high interest rate environment enough to say that this is max pain and maybe even beyond it for most. So we don't typically stick around at these levels long enough, but they do stay down here long enough to make financial decisions for us. And that's the problem with margin calls and other things. Until we reestablish back above 430 in December corn, I think we're probably entrenched in a bit of a downtrend here. How far down can we go? I've heard numbers in the 370s area be tossed around, but let's get a 3 handle in front of it first, right?
Yeah. That 40 cent, 60 cent talk, that is unnerving to me. It doesn't, I think maybe that's, what odds would you assign?
I'll play devil's advocate here and say, hey, usually by the time we start to get those types of calls is when we find that bottom, right? Once people finally say, forget it, we're going to zero, that's usually the peak pessimism that coincides with the low. So I'm cautiously optimistic.
It seems to be rather unanimous here in Chicago that this stuff is going to drop down to 340. And I always get a little nervous when everybody's on the other side of the boat. Though, TBH, it's hard to see what it could be. What's going to change the narrative? And what's going to slow this money? What's going to slow this fund trader, this money flow that, in my opinion, is pushing these markets into this 3 area? I just don't see what it's going to be. Maybe it dries out for late July, early August. But even that, I just wonder, or you get some sort of Chinese announcement which does not.
There's plenty of black swans that could happen, but I agree with you, Joe, that'd be a white swan. There'd be white swans like announcements, tariff deals. Those come, but if history tells us the last go around, China waited till the 13th hour to have done their business in trade deal round 1.0. It eventually got done, but it's certainly, they knew how to press that to the edge to try to get price and keep price as low as possible by really, I hate to say it, but it's like a knife in your back. And they're just turning it to that extent. And they know what they're doing because that's in the best interest of China. Not that I'm condoning it, but if you want to think like them, that's how that importer of our commodities would think.
You say they'll make a big purchase announcement as soon as they get enough puts sold?
Exactly. That's exactly right. That's exactly
How about no
right.
beans? Open the week at 1039.5. The high was 1039.5 and no beans. Low 1002.25. Last trade 1007.25. Dan, that was down a whopping 42 cents. Funds are estimated to be short 13,000 contracts. I'm guessing that number stands to grow. There again, we've come to the chart, and man, that doesn't look great, does it?
No, it doesn't. We have been in this dollar wide range now for November beans. It feels like for a considerable amount of time. You almost want to see it flush and make that new contract low or break down below $10 just to capitulate a little bit here to give you a nice, very clear cut bottom. Like corn, you got to need a narrative this time of year. And if you're not getting the weather markets and a reason to build in premiums or that white swan of amazing purchases in a year where we're very worried about exports, I hate to say it, but the path of least resistance is still down. And I think this is, again, one of those years where there are some problem spots out there. There are every year, but I find it hard. I'm finding it genuinely hard to find anybody who's willing to say, no, this isn't going to be one of the better crops I've had. And that's the reality. The closer we inch to August, the reality of that for beans sets in, right? So we haven't flushed lows. Corn's obviously more at that weather timing right now, going into I think a genuinely probably a little bit of an early tassel season. I'm no agronomist, but I would assume from what I've seen out there, corn's standing taller than me. It's got to be ready to go. And if that's the case in the weather we're getting, I don't see the reason why these crops are going to get that weather premium here and now. Weather's weather, though, that can change in a heartbeat, but I'm not betting on a tweet that's going to come out to save these markets at this point in time.
You are a technical analyst. However, if you're not an agronomist, that's fine.
Absolutely.
Take a look at this Nove bean chart, and let's assume that left shoulder isn't as ugly as it is. That double top there. Put a head and shoulders hat on this. You've got left shoulder, you've got head, you've got right shoulder.
We just cracked that 1020 area.
Neckline that rolls through that 1020. So help me measure. What are you, 1075 to 1020? What are we calling that? The 960?
Yeah, and that takes you down to a new contract low. So, at least a kiss of that level that we had held back in December and January, that 960 area would seem to be the next logical target. You've also got this big range, $11 to 980. If you just extend that range from about the middle of where we've been, like another 100% extension, again, that takes you down to the 945 area. So 960 to 945 is a new low, a little bit of capitulation, breaking down out of what looks like a wedge or a bear flag that we've been in since October of 2024 on the daily chart. I would make a big case on the larger time frame. You step out, you could be finding a very serious low, like a big longer term low, but it does mean, unfortunately, soybeans probably put a 9 in front of them.
Now, I want to reference this head and shoulders here in beans, even though we do have that ugly left shoulder. Head and shoulders, pretty powerful, right? In the pantheon of technical analysis, head and shoulders, pretty powerful pattern, but also very powerful when they fail. So
yes,
certainly not great news.
Indication markets will move is what we're getting at.
Not great news here on the surface for folks that may be holding out, but you can get an idea just technically, certainly no fundamentals in this, but just from a technical read on this, how much lower we stand to go. Some folks are walking around with 8 on their bean number, and that to me, I can't rule out
an 875 entirely, right? Like the chart points there if you follow the trend lower since December of 2023, right? But I also am willing to say that since December of 2024, this market has really struggled to have a 9 in front of it. And I think that's saying something too. As bearish as the picture we painted for beans has been for the last almost year, we still can't get a 9 in front of it.
Right. Good point.
That also, to be fair to the bulls here, there's a reason I think we're doing that. And that's why I'm maybe thinking we could have one of those quick whipsaw down and back up, because I don't think the person who's been buying over the last year is done buying, especially when we see that 50% plus of bean oil is going to be used. I think there's people out there realizing that there's value here at these prices. And I tend to agree. But we'll see. There's a reason there, and I can't say it for guarantee. I'm not a soybean crusher, but there's a reason. I think there's been support at these levels in the face of all of this negativity, right?
All of this negativity. August meal opened the week 275.10. High was 275.80. Low trade 267.60. Last trade I saw was 270.30.
Yep.
Down another number here, down 710 on the week. Funds short an estimated 135,000 meal. Oil, Tale of Two Cities, opened the week 54.46. The high was 54.46. Low trade 53.04. Last trade 53.75. Oil down about 0.80. Still long, about 38,000 contracts there. Anything notable on either of those charts, Dan?
On that bean oil, I'll make the joke about it being meal quickly. There's, of course, the chart where it's never going to be worth anything ever again because the
Never going to
demand
be
is
good
shifting.
again.
But as Joe pointed out, the demand is shifting towards the oil for the bean complex, especially when you see that usage. And now we've got to find a reason and a demand for the meal. Unfortunately, I think rising cattle prices are not helping that either. You've got a higher cost, right, of cattle. Of the actual cattle themselves, even though the cost of putting things on feed is low with corn prices and meal prices heading lower. The cost of putting those acquiring those animals has risen exponentially. So even though it's cheap to feed them, people may not be buying as many to feed. And that doesn't help demand down the road for the animal consumed byproducts of these two, of the crush and for corn, for ethanol, and beans for biofuel.
On this bean oil chart, do you see this gap?
I see the gap, and we are above
unfilled,
that.
Yeah.
Unfilled. I think this could be a gap and go type situation based off of how we close this wheat, and staying above that area, that 52 area on the chart, I think is really important. And really the gap, I think, closes there, 50.90 ish,
You're right.
just below 51. Yeah. So, I mean, as long as we're above that, I see us both flagging against that 18-day. There's pretty good trend line against the highs, but man, if we start to push above 54, let's just say 55 early next week, I feel like that was the type of market that looks like it's trending and it has momentum to head higher.
Lone bright spot.
Yeah,
Sep wheat
definitely
opened the week.
Definitely the bright spot on the charts.
553 open, high was 557.5, low 541, last trade 545, down 14 3/4. Funds short. I might need to fact check me on this.
No, but they are, and they have been. And I think it's only been, every rally has just been a short covering rally in wheat as of late as well.
I wrote short 63,000 contracts on that. I thought that short was bigger, but maybe they have been covering that. Folks, I would double check that fund short come into the day, or double check that out. I'll tell you, Dan, that's another chart that does not look super great.
No, and a bit of head and shoulder esque to it as well. You might get a little bit more of a right shoulder here, but that push up towards $6 we had in the middle of June, I think we saw a big chunk of that short hover out of wheat then. And for the last week or so, we've been chopping around sideways, but fortunately unable to get above any of our major moving averages on that major push up and stay above them, right? That run up took us above the 18,500 and tested the 200-day moving average, but we've fallen back below all of those as the spaghetti, unfortunately, that rainbow spaghetti remains above us with a neckline around 540 in that head and shoulder pattern. Obviously 520 new contract low, and maybe even a measurement down towards the $5 mark if that gives way.
Yuck. How about some cattle? August cattle opened the week 213.55. The high was 223.75. Low trade 213.10. Last trade I saw was 222.20. That was up a whopping 8.15. Failed. So Dan, here, tell me that's not a failed head and shoulders. What is more powerful than a head and shoulders pattern? A failure
of one.
Yep. Failure of the head and shoulders pattern. So you've got continuation here. Scratch the head to say how much more can they put on this cattle and on these feeders. But I feel like we've been asking that question for an awful long time. And
absolutely,
man, oh man,
markets
a lot of commentators.
Markets will stay irrational here longer than we can stay liquid, and that's a shout out to the hedgers and the shorts right now. There's definitely ways of taking care of that. In fact, I've been working with a lot of cattle producers that got quite sold. They're happy selling 300 feeders, happy selling 210 fats. Now they're realizing I'm not so happy 12 and 13 handles higher. So what do? We can do things to start to hedge the hedge, so to speak. I'm not advocating going out there and Texas hedging and buying more cattle that you already own at these levels, right? I'm saying that, hey, if you have gotten yourself into a short, you're kicking yourself and you don't love feeding the margin man, there are ways of reopening the upside, but maintaining that sale floor price for yourself so that you sleep at night. You're not really increasing your risk here, so to speak. What we're trying to do is reduce the cost of your hedge. And that's the big difference here. Is because the hedge is going to cost you no matter what. And we should smile ear to ear that we're taking that loss. because the physical sale that you're going to have at these prices is as of right now, the highest you've ever made.
There again is another reason for folks to lose sleep at night, because you go ahead and make these sales at 210 or 220 or 2 whatever, and then a week later you're trading 245. I mean, obviously a bit of an exaggeration there so far.
Wow, not so much. I mean, we moved 210 to 222.
A lot of guys
Yeah.
A lot of guys wondering how they're going to keep the upside open when they inevitably have to make these sales, right? And so when the packer comes to call, you got to sell it. You need to turn that into cash as soon as you can. But what can we do to keep the upside open? It was an actual conversation I had today, and I was like, what a state that this cattle market is in, that we really have to begin to think about hedging the upside, because this thing is just moving so dramatically. Close the border, reopen the border. Ag Secretary says we're not reopening the border till the end of the year. Took some pressure, reopened the border in phases, came back this week and said, no, we're shutting it back down. I don't think I've ever seen anything like that, Dan, in my entire, I've only been doing this since 1991. I don't think I've ever seen
almost irresponsible
like that.
Like, it's crazy. It's almost irresponsible if you know how much price is going to be affected by these comments you're making. Everybody should know that policymakers, when they open their mouths or tweet or post in today's day and age, the market is digest that information instantaneously. And it can, when you're talking about basically alleviating the entire supply chain issue we have in cattle or not, the market cares. I mean, it's almost getting to the point where it's like a limit up or down based off of these things. And in my humble opinion, it's almost irresponsible for policymakers to be doing that kind of thing. But at the same time, they need to be aware that there's livelihoods and everything else. By all means, I love seeing agricultural products and prices rallying. It's a show of I think, right, the fact that we can, in fact, maintain a good pricing structure in this country that can provide profitability. But you still have to be aware of margins. You have to be thinking about taking advantage of these prices if you want to take advantage of them.
Some Midwestern commentators talking about a top here in cattle prices developing. I did not see that in today's price action. I did not see that. You got some box beef.
And to be fair, as of yesterday
down.
being an outside day was a technical day for thinking about it, right? But
immediately
you needed that follow
today.
through. Exactly. You needed today to confirm. Yeah. It could have been a key reversal, but it wasn't.
A lot of talk that the box beef is backing up a bit, demand coming down pre-Labor Day holiday, pre-stocking for end of the year holiday season, trying to make an argument that you're not going to be able to float these levels off this reduction in demand. Won't be the first time we've heard that. Technical action says that's not the case yet today. I don't know what trade we got off at the end of today, but it looked like the cash cattle market was going to stand tall. And so to me, they're pulling animals ahead. You're slaughtering lighter weight animals, which means that they're pulling animals ahead. There's nothing behind them. You thought you were going to open the border and you were going to have Mexican fed cattle with cattle fed with American corn launched over the border to really make an impact in certain weight classes. But I don't see that happening.
And
I don't think anybody wants to.
I don't mean to cut you off, but we've been seeing good sales to China. To Mexico. We even saw bean sales today to Mexico. Sure. So the narrative that you're speaking of, hey, we're shipping grain south and we should be importing the cattle north right now, makes a lot of sense.
They would much rather do that. There's more money in it to get it into the United States. That they get paid less money in Mexico. Right. The United States is a lucrative market, but the idea that you're going to bring animals.
And I'm not advocating for like diminishing the value of the U.S. herd, right? Or like stepping on cattlemen's toes here. But let's be honest, we've got a situation where the demand in the United States, I think, can absorb it. And prices are proving that to us.
The idea that you're going to, and this is paraphrased from the secretary's mouth, the idea that you're going to bring this cattle into the United States and risk the screwworm, it's just a non-starter. And she doesn't believe, as a cattle connected person, she doesn't believe that the risk reward is there. So you would think very difficult. They're talking about, well, we're starting to develop the herd. I saw somebody today say the cattle herd will be larger. Where did those animals come from? I think they're just not there. And so we'll see. That'll be litigated here in the next 2 weeks. I would say 2 or 3 weeks, where the market gets a firm grasp on what really is there and what is not there. And I would say, as we have been saying, folks have to be vigilant. you better be hedged up. This is July, and this is why I was so freaked out yesterday, is because they can take this thing down in a non-delivery month. They can take it wherever they want to take it. And so folks got to be vigilant. But today's price action to me
we're
answered a
16
lot of
points
questions.
away from we're 16 handles away from the 18-day moving average on today's close and September feeders. You're 10 handles away in the fats. Yeah, that doesn't stick. It doesn't stay like that for very long. And obviously the 18-day can come up, but
on these weekly,
really stretched.
I'm looking down at these weekly feeder numbers. You opened the week at 309, 12 and a half. The high was 326, 87 and a half. The low 308.70, probably right near the open there. Last trade 325, 32 and a half, up 1587 and a half, 1580 something and a half. I got bad handwriting, Dan. You got border issues again. You got this screwworm fly situation that is a ways away from being resolved, in my opinion. You've got the threat, which I don't think will stick, 50% Brazilian tariffs. You can't. I saw somebody say today that's just the idea that you're going to put 50% tariff on Brazilian coffee. We import a lot of coffee from Brazil, right? It just makes it financially not viable. And so if you're going to send meat into the United States with a 50% tariff on it, I think that's just a non-starter. It just can't be done. And so it's very interesting here to see how this is going to play out and where this can stop. Again, could stop at any time, but today's price action says that the stopping is a little ways away, at least a little ways away, wouldn't you think?
I would agree, right? You're up into uncharted territory, new all-time highs. It stops when the guys put their hands down at the cattle barn, right? When those cash shells run dry, when the bidders set enough, that's when this stops, because futures won't hang on. In fact, futures will start pricing in lower cattle prices, I think, a little bit ahead of that, the failed auction, so to speak, at the cash barn to find new prices when that finally happens. I know it's not happening everywhere, but we're certainly looking across the country at record sale prices with weights. You're going to see a shift, and that's going to end. And it's going to end abruptly when it does, right? I've seen this movie before. We know how it ends. We're not calling for the top, but we know the top will very likely be dramatic. When the fat lady stops singing.
Cattle producer schooling me today saying, okay, how does this math out? You really can't. And to me, with these new higher prices, if we hold these cash levels, you're really going to have to look to move some of that increase to retail. And we're going to begin to test or litigate who's going to buy this stuff. And you got to wonder
you can't have the 4th of July sale where you're selling $9.99 a pound T-bones and in porterhouses that I took advantage of. That's not
every week.
That's not sustainable, right? Not with cattle prices here and beef prices at grocery store here. That doesn't stay that way for long, right?
Something's got to change. Dan,
something's got to change.
Let's talk about you. Let's talk about Dan. What's the worst injury you've ever had? I'll go first. I had a broken heart. Still not over it.
Oh,
it's been 30 years.
Joe.
30 years. The worst injury I ever had. And it just seemed to happen over and over. It was a recurring injury, Dan. As I'm very sensitive. As we all know.
Oh man. Oh, that's tough. I mean, I feel for you. I do. I've blown out my knee, broke my foot now. That elbow thing I had. Oh, I broke my wrist, my scaphoid in college. So those are my big ones, my big injuries I've had. Other than that, it's been pretty good. So I think my knee was probably the worst.
Ben Wheeler, who is now deceased, rest in peace, Ben Wheeler, was goofing around and shot me in the forehead with a Crossman BB gun.
Oh, that's like
pump, 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 pump.
Oh, yeah.
And then I peeked around a telephone pole and all I could hear was just this crazy ringing, and then blood was squirting out of my forehead. And that was pretty wild. I was like, oh, you shot me. And then I had to turn around and walk home with all this blood dripping down my face. I thought my parents were just going to pass out right there on the spot. But the interesting thing is that as it healed,
you're lucky you could see me.
I'm telling you, the interesting thing is that a week or two later, as it healed, I'm like, what the hell's going on here? And the BB was still in my head, under the skin, but on the good side of my skull.
I mean, you're lucky they make those out of steel. Those are steel BBs, not lead.
They were copper. Right? I think it was
copper, right? It's
copper, right?
My point is, it's not lead.
Copper jacket. Yeah, copper jacket. And so I had this BB in my head, and I had to go have a fine Asian doctor at an ambu at one of those fast med places, get the
So
scalpel
you went
out.
to a vet.
Yeah, pretty much. And the guy's, oh yeah, it's because you still got the BB in your head. And they put the
Fair
scalpel on
enough.
it, and it shot across the room and hit the wall. And then they picked it up and put a little package, and I kept it for damn near 10 years. But yeah, I think
That's too funny.
I've had some pretty serious like leg and hip injuries from athletic endeavors where I couldn't walk for a couple weeks. Those are bad, but getting
Nah,
shot
that
in the
one's
forehead with that BB.
getting shot in the forehead with a Red Ryder BB gun. That one definitely takes the cake.
Yeah, that Red Ryder, that'd be a cool part of the story, but this was a Crossman air rifle. That was the serious machine when we were
Sure.
kids. If you had a Crossman air rifle, pop, 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 pop. Right.
Yeah,
in the
you
fo-
can. It was a varmint shooter. You can take down small game with those. So
and for the record, didn't take me down. I stayed
right,
on
I
my
was
feet,
gonna say you
stayed
got a
on my
little ring.
feet, not knocked out. I was just fine once they got the BB out.
There's a residual damage and therapy aside, but
Yeah, exactly.
well, thanks for
Exactly.
listening to the Zaner MarketCast today. If you need more just because you can't get enough of us, you can follow along on Facebook and at the Zaner Ag Hedge on Twitter and LinkedIn at the Zaner Group. If you have a question you want answered here on the show, there's a link for you to do so in the description. Just follow the instructions and we'll answer it right here on air. Thank you again, and be sure to like, comment, and follow along to not miss a beat. And we'll be back with you as price action develops. Take care, everyone.
Have a great weekend.